Fed rate cuts. I know the market is flitting between 1 and 2, 25 to 50 basis points, but we've seen this market get carried away before as well.
Yeah, absolutely.
Usually carried away with optimism.
Yeah.
Hey, Paul. Good to see you.
Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 3rd of June, the first trading day of June, and the oil price is declining. It's down about 1/3% on Brent at $80.80. Let's kick off with Omar Najia, Global Head of Derivatives from BB Energy. Omar, your thoughts on the softening market and sort of, I suppose, in the aftermath of the OPEC Plus meeting yesterday?
So I don't think OPEC Plus was anything unexpected. So OPEC will defend the price, like we were saying next week or last week. I don't think it's got anything to do with market share. It's difficult to concentrate on market share if somebody's telling you there is no market to have a share of. So I think basically price is everything. I think they'll continue doing what they're doing, which is be supportive of prices. And I think that broadly speaking, the market started off this year or earlier this year, or late last year, from about middle of December. We set a low at plus or minus 67.50. We then rallied from 67.50 to 87.50 in early April. And we're now correcting that rise. And from early April, 87.50, we've set a low plus or minus at 76.50 basis WTI, and we're trading about 77.50 now. So we think that the downside is more or less done, and we'd be betting basically on higher prices for a variety of factors, mainly to do with exogenous markets and the way that price patterns are presenting themselves. So, no change from our side. We are bullish. We look high.
Vandana Hari, founder and CEO of Vanda Insights. Vandana, thank you so much for joining us today. I know you're a little under the weather, so we appreciate the effort. Your big takeaway, I mean, yesterday, OPEC Plus meetings, plural, there was 2 press releases. There was a virtual meeting and there was an in-person meeting. There was talks about cuts that started 3 years ago and cuts that started, it had all sorts of things in it. And as the market over the last 24 hours has tried to splice it apart, as I'm sure you have, what's your biggest takeaway?
Yeah, I think the market will probably take a little more time trying to digest what happened. Good morning, Sean. So I think there were at least a couple of surprise elements in yesterday's decisions. I think one of them was them laying out a roadmap to start unwinding the additional 2.2 million barrels per day of cuts, and not waiting for 2025 to do that, but actually starting to do that in October this year. So I think, yes, they've tried to be careful by spreading that it out over a 12-month period. But I think that was a slightly bearish surprise. I think the other element of surprise for me, Sean, was that UAE managed to get a 300,000 barrel per day increment coming on top of a 200,000 barrel per day increment that it got for 24. So over a period of 2 years, 500,000 barrel per day increment for the UAE. So actually over the next 12 months, as the UAE also ramps up under its new increased quota, we are actually going to see the 8 OPEC plus members put about 2.4 million barrels per day back into the market. So all in, I think it's a little bit bearish. That's how I see it.
Paul Horsnell, Head of Commodities Research, Standard Chartered Bank. Paul, your thoughts? I mean, sort of again the same question coming out of the OPEC meeting yesterday. There was a lot of the expected, rollover of the cuts and so forth. But basically, stay the course. Your thoughts on the big takeaway? What the markets will end up focusing on?
Yeah, Sean, I mean, as I said, I mean, there's a lot of detail, a lot of meat in what came out of the meetings yesterday. I mean, essentially adds a lot of transparency back into the market. Remember, it's just over the past few months, a number of analysts and media saying, oh, look, it's terribly bearish because there's no roadmap. We don't know how the cuts will be unrolled. We think they're going to have a fight over the new targets. And here we are, all sorted out. Here's a roadmap. The discussion on targets has been pushed in towards the back end of next year. The issue of the baselines for UAE have been sorted out, and I think it's probably going to take the market quite a long time to really get to the bottom of quite how many moving parts there are here. Not much this was expected. The increase in output, I mean, for heaven's sake, I mean, we knew that those cuts to the year, certainly the top range of the 2.2 was going to come back onto the market at some point, because otherwise the market's going to be horribly unbalanced. It's coming back in a very gradual way. Doesn't start until we get into the end of this year, continues to Q4, continues right way through to September next year. Even that phasing in of the extra 300,000 from the UAE, it's phased in. It doesn't go on the full 300,000 until the end of Q3 next year, starts in January. So overall, it's not very much supply coming on. I suspect the market will be clamoring for greater supplies before that. And again, the whole point of this is this isn't set in stone. If market circumstances change, they can go faster, they can go slower. But after all that clamour for more transparency, how are you going to sort out these issues? Here it is, complete transparency. Monthly targets for the 8 countries for every single month out. You get to a point where it's almost becoming a little bit over the top to again worry about transparency, etc. I think this is a very sort of decisive way of approaching all of those aspects which were seen as weaknesses.
I wouldn't want to be the Rystad or whoever is tasked with counting that Algeria added its 4,000 barrels from September to October and so forth, that granular level. But Omar, I mean, looking at the overarching sense of, as you've always said, OPEC comes and goes, and whether it's a big influence or not is another factor. But the reality continues to be that this is a softening market that seems to have a downward draft to it that is not stopping. And the OPEC decision yesterday, at least for now, doesn't seem to have stopped that downward draft from the peak of early April to now early June, 2 months exactly down, $13, $14. Your thoughts on that continuing? Are there resistance levels? Where do you see it going from here?
So basically, no. We think that you have to look at things. Look at things broadly, right? If you look at broadly speaking, we've made an initial move up, $20 up. We've corrected $10. We think this market is going to go higher. I agree a lot with what Paul said. I mean, OPEC is telling you, not only 1 + 1 = 2 today, but they're also telling you that for the next, I don't know how long, we're going to do 2 + 2 +. So forget about the kind of, numbers and this is what we're going to do. I mean, you can't be any more kind of, patting somebody on the head and saying, okay, this is exactly what we're going to do, blah, blah, blah. So oil is done. Oil is cooked. Oil is put to the side, finished. Fundamentals, OPEC, they can always come and dress it up or do whatever they need to do. So the main question that you should ask yourselves is not are we going to drop this week, or did OPEC do enough? Or no. Look at the big picture, right? 10 years ago, oil was at the same price it is now. Is that reasonable to you? If it's yes, you should be selling this market, right? If it's no, then you should be buying this market. To me, it's a no-brainer, complete and utter no effing way. So we are bullish this market. Nothing is going to change in that kind of, look at what OPEC did and will it be
Well, I
plus
mean, what
200
is
or minus
changed?
200?
I mean, there is some fundamental changes here, just to sort of interdict and put some out there for your thought. I mean,
Yeah.
Sinopec, China's biggest refiner, announced in the last few days that they're seeing peak China oil demand in 2027. That is a significant change. The demand for oil in China is going to stop growing in 2027. That's by
but
the Chinese stating that.
Yeah, but we've heard that peak oil demand was going to be in the year 2000. We've heard that there would be no oil after 2020. We heard that oil is going to be continuing, and they're going to find that they're going to do, and we're going to go to carbon zero, and then there'll be no demand, and everybody's going electric. People can say what they want, right? I don't care. Unfortunately, or fortunately, we need to make money now. We don't care about what people say in 2027, what's going to happen, and we're all going to be, whatever it is, LGBTQT and all this kind of stuff. We don't care. All we want to do is make money. We think the oil price is cheap. We think it's cheap compared to anything you want to look at. We think it's cheap in dollar terms. We think it's cheap in S&P terms. We think it's cheap in gold terms. We think it's cheap. It's very, very cheap. And if it's very,
very, that's you nearly got a rap there. If Paul started tapping on his desk and gave us a basic rhythm, we could get a Beyonce going.
We like it. That's not to say it won't weaken, but if it weakens, I think it's a buy. This oil price to us looks like a buy.
Vandana, I mean, all things aside, OPEC, which of course it's difficult to do the morning after the night before, but we've got India demand looking pretty solid, and in the current period, summer, very big heat wave, an extra draw on power supply. We've got China's factory activity hits a 2-year high according to the Kexin PMI numbers published overnight. I mean, these are all relatively should be bullish numbers. These are two biggest population centers in the world, signaling positive, outlook, and yet the oil price is uninterested.
So, Sean, China, we get 2 sets of PMI data every month. One is the official National Bureau of Statistics, and the other is from the private Caixin, as you just mentioned. Usually the two don't diverge too much, but this time they appear to have. They survey slightly different kinds of factory activity in terms of the size of corporates they look at. But look, I wouldn't get carried away. And just to finish that earlier point, the NBS data for May that came out on Friday actually showed a contraction in manufacturing activity. So it's like, sometimes you will pick the data that suits your narrative. So I wouldn't get carried away with that. If you look at all the data, macroeconomic data, China's crude imports data, crude imports from January to May in China are flat year on year, flat, zero growth. So don't get carried away by one or the other data. But if you take zoom out, look at the big picture in China, and it sounds like a broken record. I know I've said this often on your podcast, Sean.
You're never a broken record, Vandana. You're always fresh and enlightening.
Thank you. That China has a very steep uphill climb still in re-injecting momentum in its economic growth. A few words on India. So yes, the economy has done very well. 8.2% growth in the fiscal year ended 31st of March. Clearly a good report card for Narendra Modi's government. There's been loads of public spending on infrastructure. Our manufacturing growth has been very strong. We know Modi is trying to aspiring to make India a manufacturing hub. So all of that has added to has boosted demand, oil demand growth in the country. So again, fiscal year ended 31st of March, Indian demand, fuel demand grew almost 5% year on year. But then again, as I like to point out, if you look at China and if you look at India, even with the 5% growth in India, it's not going to be able to make up for the deceleration of growth that we are seeing in China. And then, of course, Southeast Asia is a story by itself. I think a lot of those countries are probably going to suffer as well with all these export, the backlash against Chinese exports, which is now also spreading to a lot of the Southeast Asian countries because, the US and Europe have found out that China has been bypassing some of the tariffs by exporting via these countries. So all in, Sean, Asia will continue to grow, but, not anything on fire for sure.
Paul, I wanted to get your thoughts on, there was one, the surprise or surprises in this OPEC meeting yesterday was the fact that, and it emerged late last week, that they moved everything, all these agreements deep into 2025. And like Omar just said there, he's the only trader at the table here. He's looking to make money today. He's not. Was it necessary? Why did we get this full view into 2025? Was it too soon? Does it matter? Your thoughts on that sort of big picture, big commitment outline pathway through the whole of 2025?
Well, I think as Omar said, that just provides the transparency. It says, look, here's the plan. If the Fed only provided no forward guidance whatsoever, markets would find that somewhat destabilizing. And I think the same case here for in terms of the oil market. It's designed to provide transparency. It's answered the question as to, okay, how and when will this the 2.2 million of cuts come back. It's answered the question on the next tier down, the April 23 cuts. They're locked through.
You keep using the word cuts, and I think it's interesting from a language point of view. I use the word in my publishing that they're going to raise production. There's a lot of this bring back the cuts thing, which is sort of like more kind of, but ultimately what we're talking about here is raising oil production.
Well, that's semantic, Sean. This is oil.
Well, it's not really. You use the word cuts. It's sort of
now. Whether you assess that from when it was here and it was taken away, or whether you assess it from down here and bring it back on. The net effect is it's a V shape. It was being produced, then it wasn't being produced, and now it's very gradually being put back. But the point is, does anybody really believe that the oil market cannot take any more oil from OPEC Plus? Is demand that bad? Are all the other commodity markets mad? Because they're all going up but very strong on the basis of very strong views on the world economy, on China. It's just oil that isn't. Oil's got a massive, great speculative short. That's why it's weakened. It's nothing to do with careful analysis of the oil market. If you look at, particularly on Brent, the short positions have been large. Algorithms are not very good at reading OPEC communiques. It's going to take them a while to work through. And so, you cannot judge an OPEC meeting at 10 to 8 in the London morning when all we've had is, a few media, a couple of analysts, and the algorithms not knowing what to make of it. So I think overall, I take your point on the semantics, but it's crazy to believe that there can never be, over the course of the next 18 months, scope for OPEC Plus to return some of that oil that was there but isn't there anymore. Should I put it that way rather in terms of...
Well, I suppose the other part of it is, and Omar, welcome your thoughts on this, that the caveat is always there. They can change the policy at any time in a way that's
but Sean, what do you want? Before the market was saying, oh, look, you're not giving us any idea of where we're going. Now they're saying, here we are, but there's flexibility, it can be moved. Now you're saying, oh, I'm worried because there isn't any flexibility. And of course it can be moved because the world moves. They will adjust it. This is a clear statement saying that as it looks at the moment, this is the plan. If things turn out very differently, and the way it will turn out differently, I think, is that they've been very, very conservative on their assumptions. I think demand is running further ahead of this to imply that the market will actually be calling for oil to come on a little bit quicker than this. The
Excellent.
other thing, elephant in the room, as I mentioned.
Yeah, but their own forecast is pretty bullish. I mean, 2.2
no, be
million.
careful. Careful to draw a line between what OPEC Plus as a group does and the OPEC Secretariat. The OPEC Secretariat produces very good research. It provides some baseline numbers. Ministers do not base their decisions purely on the OPEC Plus numbers. It's informative, but you can't draw direct lines from the OPEC Secretariat numbers through to OPEC Plus policy. You'll be very careful on that. And so that's what I was saying. They're based on very conservative views of world economy in terms of demand. The other elephant in the room is US supply. It's been flat to falling for 8 months now. Don't see it improving over the next 3 months. We're going to get to a point sometime around the end of Q3 where US supply won't have grown in a year. I mean, the year-on averages are higher, but in terms of comparing months with year.
Your general sentiment is that they could be bringing back these this supply sooner than the fourth quarter, that 2.2.
No. I'm saying over the 15-month period, I think there's scope for bringing back this oil faster. At the moment, I say, oh, look, it's extra supply. Well, yes, it is, but it's over such a long period and in market conditions where that extra supply would be justified. And in that sense, you can't really just be concerned that, yes, they're going to bring back some of those cuts without putting that in the context of, okay, why are they doing that? They're doing that because the balances they think will hold that. That's on a moderate demand view and with a view of supply outside the DOC countries being, I suppose so, fairly muted, and in the US in particular slowing down. So I think there is room for it in the numbers. If there isn't, that's the time when you can go back to it. But trying to back out the view of the market from what they've done, it just looks to me as if that's a very cautious, very conservative, exactly what you'd expect. I mean, they will be cautious. They have been for quite a long period. So,
Omar, did you want to jump in there? I was cutting you
off. So I mean, what Paul said is extremely important. You have to understand the market is positioned extremely short, aggressively short, very, 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 very short.
Just explain that out a little bit. Extremely short, that people are betting the market's going to fall.
Will go down, yeah. So if you look at it, so after we hit the peak of 87, the market started to fall. It got to a level of about, let's call it $78 in early May. From early May to early June, the market's done nothing except move sideways. And basically what you've seen is you've seen like a price where the price starts off, goes up, stops, and then gets sold back down again. That's aggressive selling. And it's moved sideways in a month. It's like somebody putting a cork on some water and trying to push it down. It comes back up, try to push it down, it back up. So what I'm trying to explain is we are very close to a low on TI. And it doesn't have to do with people thinking, oh, you know what? I'm bullish now. I think the price is going to rise. No. All it has to do with first is getting people to say we're no longer negative oil. Once they buy back and the price starts to rise, then you're going to get people say, you know what? I actually like this. And they're going to buy as well. So the market is positioned extremely short, and they've been trying for a month to push prices lower. So I don't think they're going to be able to. I think basically the downtrend is looking tired. We've broken above it. We've come back and tested it from above. I think this market is going to go higher and substantially. So I think the risk of the next move is to the upside and not to the downside. Just looking at oil itself, let alone exogenous markets.
Do we have a survey question on this? What was the biggest piece of news for oil market to take away from the OPEC Plus meeting yesterday? The rollover of the 2.2 million barrel a day voluntary cuts for Q3, the extension of all OPEC Plus cuts until the end of 2025, 3, OPEC Plus 8 to start raising supply in Q4, none of the above. What was the biggest new piece of news for oil market to take away from the OPEC meeting yesterday? Perhaps all of the above, but which of these do you think will end up sort of giving the direction of travel? Vandana, looking at this meeting yesterday, just sort of getting into the weeds a little bit about the OPEC 8, those that are part of these voluntary cuts that came and met in Riyadh yesterday. Just looking at the dynamics of OPEC, OPEC plus, now we have this OPEC plus 8. What do you think that tells you about the sort of collective as a whole?
Yeah, so I think it's interesting, Sean. We started this podcast by asking ourselves, what is the significance of the very clear roadmap laid out for unwinding the cuts? And as Paul says, OPEC Plus is trying to give more transparency to the market. I would agree with that. But another takeaway for me from this is that I think the 8 members, and I would say Saudi Arabia, especially amongst them, because cutting by 1.5 million barrels per day extra. I think a lot of these members might have been running out of patience. And when you have lopsided cuts, we have to understand that it's a very different situation from when everybody has their shoulder to the wheel. So I also see this as an effort by OPEC Plus to maintain harmony, maintain cohesion within the group. Yes, it's going to take 3 months out and a whole year for those members, the 8 members, to regain the cuts that they had pledged on a voluntary basis, but at least they have that sort of end goal in sight, which probably makes them feel a little bit reassured. I think overall, just a couple of other points worth mentioning as well is that Iraq and Kazakhstan, in the lead up to, in the last few weeks, we had heard that they were angling for higher quotas or higher baselines, and neither of them has got it. And they won't until, unless something dramatically changes. The next review is going to be in November of next year for 2026. So it just makes me wonder why, is it like, I don't know if punishment, quote unquote, is too strong a word, but these 2 countries have been consistently overproducing. So I think in that regard, I also see that these 8 members, including Iraq and Kazakhstan, coming together for in-person meeting, maybe they may have been a lot of interesting, I imagine, negotiations and bargaining might have gone on behind closed doors, that these 2 countries now have to wait for over a year to get higher quotas. So all in, my takeaway is that aside from OPEC Plus probably tried to give a bullish signal by saying, oh, we are continuing the cuts made since May 2023. I think the market was not even considering those. So that bullish signal to me is a little bit lost. And the other is that I think they have, most importantly, they have managed to save and preserve the harmony and the cohesion within the group.
Paul, last word with you this morning. Now that we're through this gate of the OPEC Plus, and as we've clearly stated, and you have, that we have this very transparent pathway for OPEC Plus over the next 18 months, caveats that this or that might change, but ultimately the pathway is unveiled with all of those respective countries signing off on it. What is the next thing for the oil markets to be watching out for? OPEC's going to sit sort of on the sideline with its pathway. That's a reference. But then what's the next big thing that's going to give this market direction? Is it going to be the easing of Fed rate cuts? Is it going to be the war in Ukraine getting very hot over the summer? What do you think the oil markets now will start to turn to for direction?
Well, I think the main direction, Omar's already mentioned. I mean, the key thing here is just it's not a wave of necessarily bullish investors coming in. It's the shorts closing out and realizing there's not a huge amount of downside to oil from these levels. That's what gives us the next sort of push up and gets back some of that loss over the course of the last month, which I think has been down to speculative funds. It has been down to the fast money. So that's the first key thing. beyond that, to your question is, again, back onto what Omar said in terms of then why would people start feeling, a little bit happier about oil? I think part of it would be that the numbers have to deliver, demand has to come through at roughly in line with projections. There should be an extra 1 million barrels a day of global demand in Q3 relative to Q2. Where does that find itself? Is that reflected in inventories? And again, think of simple things like in terms of changing sentiment. I go back to US supply. Everywhere I read, US supply is booming. It's the reason why OPEC's trying to keep oil off the market. There's been a huge increase in US oil this year. And then I look at the numbers and it's going down. I think when more people are looking at the numbers and just sort of feeling, okay, this feels tighter, then you get that next leg up. But as Omar said, the first change here, I think very much it is down to the speculative short, seeing that this isn't really the best thing to be short. And some of the longs, which have gone to other commodities. I mean, why go long oil when oil's got all this problems with the speculative shorts, with the algorithms?
Cocoa has gone up a multiple of 10, I think, in the last year.
Well, I mean, again, you have to separate, what is genuine vol by people taking market position and what is down to algorithms and latency. And I suspect that an actual vol that you can trade is still challenged. I come across a lot of traders who are saying, look, to be honest, I don't understand how it's trading. And so, if you're bullish the world economy, bullish on, or you've got a particular Fed view, why invest it in oil, which doesn't seem to be coming through with any sort of macro-related view? Let's go and put it in copper. Let's go and put it in zinc. And so, restoring the oil as a commodity which trades as you'd expect to is the next step. And I think that's going to happen when the shorts start pulling out and thinking enough is enough.
Well, we're going to have to leave it there. Enough is enough for today. $80.92 on Brent. Little change, one would have to say, in morning trade in Asia, but it's down rather than up. The news from Riyadh yesterday and the virtual OPEC Plus meeting is still being digested. As Paul said, he's just got out of his pajamas in London and he needs time to read the tea leaves on this one and all his peers across the city. It'll be interesting to see, as this does get digested over the coming days, how it is seen from the point of view of the markets. Is it going to give some sort of game-changing direction for this market that has been very tightly range-bound in the low 80s in recent weeks, even though we're now at the very low end of that range. Omar Najee, as always, Monday morning wouldn't be the same without you. Paul Horsnell in London, thank you so much. And Vandana Hari in Singapore, really appreciate you joining us today, feeling a little under the weather, and we thank you for that. All the best. Have a great week, everybody.
Thank you.
Thank you.